Hey everyone, it's Shannon from EJDM CPA. It's that time of year that everyone starts thinking about filing their personal income tax returns. I want to take a moment to highlight what's new for filing your 2020 personal income tax return. As COVID is still a concern, a lot of people are curious if there are or will be any changes to deadlines or payments. Last year, Canada Revenue Agency, CRA, extended the filing deadlines for 2019 personal income tax returns. Currently, there are no known extensions to the tax return filing deadline. Individuals need to file their returns by April 30th, 2021, and self-employed individuals need to file by June 15, 2021 to avoid late filing penalties. Any tax balances owing, even from self-employed individuals, need to be paid by April 30th, 2021. One relief measure CRA has announced is for tax payments. Eligible taxpayers who file their 2020 tax return will not be required to pay interest on outstanding balances from the 2020 year until April 30th, 2022. In order to get this, you must meet certain conditions, which include your taxable income must be $75,000 or less in 2020. You receive special COVID payments, so this could include payments such as CERB, EI, the Canada Recovery Payment, the Canada Recovery Sickness Benefit, just to name a few. The final condition is that you must file your tax return on time. What's new for income and deductions? One of the significant changes for 2020 will be the inclusion of the COVID benefits received throughout the 2020 year. If you received COVID payments such as CERB, EI, the Canada Recovery Benefit, the Canada Recovery Sickness Benefit, the Canada Recovery Care Benefit, and the Canada Emergency Student Benefit, this income is taxable and will need to be included on your 2020 income tax return. You should receive a tax slip, whether it be a T4A or a T4E. Now, one of the areas that may catch people off guard is the impact of these benefits on their tax return. In a typical year, they may have had employment income in which their employer made their proper withholdings. On the COVID payments, taxes were not withheld on all of these benefits. Individuals who typically are in a refund position may find themselves having a balance owing this year. Now, for the self-employed individuals, you may have taken advantage of the CEWS or CERS program or even received the CEBA loan. The CEWS and CERS payments are deemed to be received on the last day of the claim period, even if you did not receive the payments till the 2021 year. For example, if you received a payment in 2021 on the CEWS period 10, which claim period ended December 10th, 2020, so even though you received the payment in 2021, this would need to be included on your 2020 personal income tax return. Similar, if you took out the CEBA loan, the forgivable portion of the interest-free loan is taxable and included in income when the loan is received. I do want to highlight that there is still the ability to apply for these programs. If you need assistance, talk to your accountant. Home office deductions. Employees have always had the option of claiming office and home expenses if your employer signed the T2200 form. This is still an option for the 2020 tax year. As so many people were required to work from home, CRA added 2 additional options. If you were required to work from home due to COVID-19, more than 50% of the time, over a period of at least 4 consecutive weeks in 2020, then you have the option of 2 methods. The first one is a temporary flat method. This method requires no form for your employer to sign and works out to $2 per day worked from home to a maximum of $400. The Simplified detailed method requires your employer to fill out and sign the T2200S form, but then you're able to claim actual office and home expenses on a prorated basis. If you meet the criteria for these COVID-19 deductions, you should consider which benefit is best for your situation. If unsure, talk to your accountant. If you do need additional information on this topic, check out the videos that Brian has put together on our EJDM CPA Facebook page, Instagram, and it can also be found on YouTube. Some quick notes on changes to non-refundable tax credits for 2020. The basic personal amount that everyone receives on their tax return was increased to $13,229. In addition, a new non-refundable tax credit is available for the 2020 year for the digital news subscription credit. You can get up to $500 credit on eligible digital news subscriptions you pay for. Finally, just want to touch base on the Canada Training Credit. Starting in 2019, if you are eligible, you could accumulate $250 per year in this credit limit, up to a max of $5,000 over a lifetime. If you accumulated a balance from 2019, you may be able to claim a credit for eligible training fees paid. I hope these details assist you in filing your 2020 personal income tax returns. Any questions, please reach out to us either at the email noted on this page or through social media. Thanks.